Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss Nasdaq 100 performance as the index continues its move higher. Shawn, it's great to have you with us. And the S&P is also hitting a new high. So are all things clear on the equity front?
Yeah, I think that's a little bit of a misreading sense of security. So on, if you look at the NASDAQ, continues just incredible performance for the year. There was a lot of people noticing that the S&P 500 did hit a new all-time high. I think there's a little bit of a disparity there, and that is, we have seen the S&P 500 got to its all-time highs, but there's still some sectors that are either in the red or sort of languishing in that the performance hasn't been I would say anything to write home about. And so I think there's this sense that, well, the equity market is sort of decoupled from the actual economy, and that we're far from getting the economy firing back on all cylinders. We've certainly made some progress. If you look at the housing data today, came in pretty strong, well ahead of expectations. But I think it shows we're by no means in the clear. So although the S&P 500 as a whole did hit a new all-time high today, some of those sectors are still lagging behind. And I do think the reason you were able to get to where you're at is a lot of those tech names that were kind of dragging the index higher despite underperformance in certain sectors. But that sort of is why you see that incredible outperformance from the NASDAQ 100 to the other indices, because you sort of don't have those other sectors that have been sort of dragging on the indexes. You actually are really just focused on those tech companies that are performing incredibly well right now in this environment.
Yep. Tech, healthcare, consumer discretion is in there. Well, not having financials, and I think only a handful of energy companies certainly does help the Nasdaq 100. Another constituent that is helping it is Tesla. I mean, what are investors expecting with this company?
So there's some news that Tesla may be putting out some new software, making a breakthrough on the autonomous front. And there's some people out there who have said all along that, look, what you're seeing from Tesla, everyone thinks it's not a car company. It's not like a Ford or a GM. You can't think of it like that. I mean, really what they are is a massive, almost software on wheels. Some people have said all they're really doing with their vehicles is going out there and just gathering thousands and thousands, if not millions of different data points that they are going to use to train these autonomous models. Because the one thing about these automated or artificial intelligence types of offerings or products is you do have to start out with a large training set of data. And so it looks like Tesla has been using their vehicles maybe to collect that driving data you need to make that next leap forward in autonomous vehicles. So I think there's this sense that they really are starting to turn a corner, both in terms of a traditional vehicle manufacturer able to get those numbers out there, get those deliveries going, get new plants coming online. But I think they are expecting them to really make a big breakthrough on the technology front. And that's why you get this incredible stock performance. But there's still, by no means a certainty here. And that is why if you look at what the options market is implying just for a potential range for Tesla moving forward, we can actually put that up on a chart and see there's an incredible range for the months to come for investors, just in terms of what their expectations are for potential range. So definitely do not want to take your eyes off of Tesla by any means here. I think there's going to be some very interesting news coming out here from Tesla in the days and weeks to follow.
All right, Shawn, to wrap up here, any other comments on earnings season with the retailers out this week? I'm curious to see if you've noticed any trends with corporate management talking about how stimulus checks helped the bottom line, and if there has been any bit of a fall off from there now that there hasn't been a consistent deployment of these checks.
I think that is something that we heard, and that was in a lot of these retailers, and that was the stimulus checks did help because the stimulus checks went to demographics that are really likely to come out there and spend at their stores. So there's a lot of noise being made about back to school spending. But the one thing that's interesting is back to school spending is usually made up of a little bit of an electronic spending component and then the clothing component. I don't think anyone is expecting electronic sales to fall off right now by any means. So, and those are usually the more high margin type products anyway. So maybe there's not going to be as much clothes being sold, but there certainly are still going to be electronics. Maybe because it's not because you're going back to school, but because you're quite the opposite, you're staying at home. That could be the one thing to look at for these retailers. Then also home furnishings, people are really, sprucing up their homes because they're spending more time there. That can be another thing that can help some of these retailers. So definitely give you some interesting sort of anecdotes to take out of the retailers once we get through all of them and get a good feel for what the consumer is doing. But these stimulus checks, I think, were a major driver of a lot of the performance and the revenue and the growth in some of these areas for them. And moving forward, I think that is one major overhang from the markets is that they want to see another round of that, and they don't want anything watered down. I think now that's the concern coming out of DC is the next round of stimulus can be a little bit more watered down.
And that's why I think investors are grappling with how the market continues to march to all-time highs. And it's very disconnected from what we're seeing with economic data, which is not expected to improve if there is no consumer spend. So you're right with this, and between going in with the election and a potential administration turnover, it's going to be a very interesting Q4 to say the least. Shawn, thanks so much for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.